Welcome back. South African government bonds have started the year on a firm footing, with yields hovering near multi-year lows. This as investor appetite remains strong. But with global interest rate uncertainty, domestic growth risks and key policy signals from the South African Reserve Bank still in play, will the rally run further? Joining us to unpack the latest moves in SA bonds is Vishal Rama, Portfolio Manager at Prescient Investment Management. Vishal, thanks so much for your time this evening. As I highlighted there, towards the end of 2025, we did see a government bonds rally with yields falling to multi-year lows. We started the year strong, with yields just last week hitting their best levels seen in 7 years. Is it fair to say that 2026 could be another bumper year for the asset class, or are markets already pricing in a lot of the good news?
Yeah, thanks for having me, right? So as you rightly say, a really strong year for bonds last year. I think to expect that for the spring 2026 will be really difficult to ask. I mean, a lot has been done over the last year, and we think that, obviously, what we think has been the main driver for this shift lower in rates has been the inflation expectation announcement of 4.5% to 3% by the South African. That definitely caused bond yields to come lower. Now, that is obviously been priced in already, so we think that bond levels are now close to fair value. I mean, there is maybe space for a 20 to 50 points per basis point shift lower, but nothing major. We think in general, bonds will stay around those yields, if anything, right? Unless there's some major crisis or something that in SA space. I mean, we don't think, we're not expecting a bumper year as a sort. Yeah.
All right. The domestic issues aside, right, the domestic issues that have been boosting the bond rally, what stood out for me is how global uncertainty combined with a weaker dollar has driven, a rotation into emerging markets, the likes of SA, of course, also included. Is this a fair assessment to make, Vishal? And how much further uncertainty are you pricing in?
Yeah, look, so I think the weaker dollar story definitely has obviously helped emerging markets. So there's been a sort of rotation away from sort of developed markets, and now, these foreigners are looking at the emerging markets. And now, if you look at the list of sort of countries in that space, I think SA seems quite high on top of that list, right? You can look at like Mexico, Brazil, and so forth. SA has been quite highly on that, given that we've got such a credible reserve bank, a good financial institutions in place in South Africa. So foreigners naturally, when they look at for value or looking to apply risk on or think of putting it in, South Africa seems immediately on top of the list, and hence they come and they'll look to invest in South African markets. In terms of uncertainty, look, for sure, right? That can definitely play around with yields going forward. And as I say, right, if geopolitical tensions shoot up, we see a war in Middle East, China, Taiwan, etc. Those things do occur, definitely that feeds into our bond market, and we will see our yields spike back up, given that more risk will be priced in as a result of that. So at this point in time, we don't necessarily see, our base is not for that to occur, but those are definitely that we watch for, and we'll cause the bond yields to shoot up higher.
All right, turning to today's auction, government sold bonds worth about 3 billion rands. What did you make of the action playing out today? It appears that buying appetite remains firm. The last time we spoke, I think buying levels were at around 3.5 billion rands.
Yes, so at the MTBPS, the announcement of shifting the amount of nominal bonds has been now lowered to 3 billion now, or 3 billion. And essentially, from the today's auction, it's quite a strong one, right? We saw 33s, 39s, the 48s on auction. The 38s and the 33s both between 3 and 2 basis points lower, all cleared on the day. And then the 39s were at market. So again, a nice strong auction with basically market participants coming back in the space again. Having said that, last week we saw our first lingo auction, that sort of tailed quite, it wasn't a great auction at all. So I think there's more people getting back in the space, again, in South African market, came back from the break. So, just getting back into the bond market and, for some strength in that auction today.
All right, we have to leave it there. Vishal, thanks so much for your time and your insights into the bond market. That was Vishal Rama, Portfolio Manager at Prescient Investment Management.